Let's get the conversation going then with our market master of the day, Gautam Trivedi, managing partner at Nepean Capital, is with us. Gautam, thanks so much for joining in. Hope you had a great festive season and enjoyed the rather big eventful week in the markets that we had last week as well. So let's start with India, actually. We'll talk about Trump and tariffs and all of that in a bit. But India, because this is a market that's not used to consolidation anymore, right? Up till September, it was a buy every dip market. Dips were as shallow as 2-3%. But now we've got this 8% fall, and now we're trading in a range. Do you expect more of this ahead?
You know, Surabhi, you raised a valid question, because when the market was going up, nobody complained. Everybody was happy. The media was happy. Investors were happy. Companies were happy. And everything seemed like this party could go on for another 12 to 18 months. But I'm kind of glad in some way that the reality has set in, that there is gravity. And if you look at the way some of these stocks have fallen, especially the mid and small caps, I think it is a wake up to the fact that stocks can correct and the market can correct. But getting back to the real cause of what's causing this correction, I think if you look at the peak of the market, which was on the 26th of September, 216, I think, was the level of Nifty. And, as you said, it's been an 8% correction since on the Nifty itself. But here's the thing. I think, foreigners weren't really that active in the first place year to date in India, if I look at it from January onwards. But they got a perfect reason to actually sell when China suddenly took off. So this was a very sudden move by the Chinese government to revive their economy. They haven't come up with more specifics on what they're exactly going to do. But the fact is that became suddenly an alternative to India within the EM space. And I think that's when the selling started. Now, to your question specifically on how much more can they sell, let's look at it this way. As of the 26th of September, foreigners owned $1 trillion of India's $5.7 trillion in market cap, roughly about 17%. They've sold about $13 billion, or 1.3% of their total holding on a mark-to-market basis. Can they sell another 0.7? Can they make it 2.5% from 1.3? Quite possible. What can cause that to happen? We've got an earnings slowdown. I mean, it's very evident in the results, so no surprise there. But the reality is that even back home in the US, if you look at the earnings growth for the S&P 500 for calendar 2025, it's as high as 13%. That's the consensus number. So, we are looking at 14 to 15% earnings growth for fiscal 26. We have competition from the US back home itself. And of course, don't forget China. China also consensus earnings growth are 12 to 13%. So we still have that, of course. Yeah.
Yeah, Gautam, I want to, sorry to interrupt, but I really want to compliment you, because I remember that conversation that you had with us a couple of months back. You'd come to our studios that time, and you had just returned from a US trip, and you were telling us that it is so red hot. We were talking about room rates, I think, in New York, right? And that's when you kind of flagged off just the sheer power and strength of the US economy. And guys, I just wanted to bring this back to the table, because I think even before this became the center narrative of investing more in the home market, Gautam kind of gave us a tip-off, because he'd seen it on ground there in New York.
Okay, all right. Good one, Gautam. Hi, Gautam. Good morning and good to see you. Zomato is something that you like, right? I think that's one stock that we have discussed in the past. Now, you have Swiggy, so you have an option out there, and they have come at a sharp discount in comparison to Zomato. What's your view on that IPO, as well as, since Zomato has come off a little bit from the recent peak, your view on the space on the whole?
I think the market's increasingly looking at both of these companies from a quick commerce perspective and how deeply penetrated they can get. Of course, there's a third player, which is Zepto, and then you've got the incumbents like a Reliance Retail, and you've got DMart. And of course, they're getting aggressive, Big Bazaar as well. So I think the competition in the quick commerce space is intensifying, but the market's increasingly looking at both these listed companies as a means of figuring out, again, I'm underlining the word listed companies, because the reality is that it's all good when you look at a sector, when you look at stocks within the sector, but what is listed? Which way can a public market investor actually play the sector? And there are only two right now. Well, there was only one, but there's a second one that's getting listed shortly, which is Swiggy. So my view is that quick commerce is here to stay. The next generation, including my two boys, they don't want to walk into a Kirana store and actually buy anything. They haven't been to a Kirana store probably in years. It's just easier for them to place an order, whatever it is they want, whether it's shampoo, whether it's soaps, or something to eat. It's easier to do it through your smartphone versus physically going to a store. So I think both these companies, the future growth is going to come from quick commerce, and that's what I think investors should be focusing on.
Gautam, what is your read of this earnings seasons and the disappointments that we've had so far in Q2? And what does it tell you? Is that expected H2 recovery perhaps not going to play out to the extent that the street is hopeful for? It's going to be a little more deep-rooted in terms of a weakness. And how should one approach stocks like, say, in Asian Paints? It was a darling, it was a big wealth creator. Are we looking at a bottom right now in Asian Paints, or perhaps not?
Yeah, let me answer the first part, which is in terms of earnings growth. I think if you look at, and we've been studying this over the last about 3 to 4 years, but specifically, if I look at the last 3 years and quarterly results within the last 3 years, i.e. starting from the second quarter FY22 to our current quarter FY25. And the data that I have for the current quarter is as of the previous Fridays. Sales growth has gone, i.e. from the second quarter FY22, I'm reading this out directly, sales growth has fallen from 25.7% to 7.6%. EBITDA growth has fallen from 12.9% to 1.2%. And PAT growth has fallen from 38.6% to a negative 5.3%. Again, the caveat is that all of the companies in this current quarter haven't declared results yet, but based on the numbers so far, they're pretty disappointing. So yes, is there a slowdown? I think there's no question about that. Specific to Asian Paints and specific to the paint sector, Asian Paints I think is a great company. 8 days of working capital cycle, which is unheard of in India. I mean, outstanding management. It ticks all the boxes. But guess what? There are at least two big ones, two big industrial houses that have decided to get into the business, which is the Aditya Birla Group and the GSW Group. Deep pockets and are leveraging their existing relationships with cement dealers or steel dealers, as the case may be. And I think there is a business case for both of them to get into this business. So margins going forward, will they come back anytime soon? I doubt it. Of course, raw materials is an important element of margins and profitability, but I don't want to forecast what crude oil is going to be going forward. But the reality is, this space is something that we are currently avoiding.
Okay, that's interesting. Yeah, perhaps we're looking at a structural, downgrading in terms of that margin profile. That's a point well taken, Gautam. So to come back to the point where we started from, right? You were saying that today, I think the S&P 500, you said, right? Or it was the Dow, where average large cap earnings growth in the US is 13%. And then we have our own issues. Some of them we've already discussed. So where does that leave our market? More time correction, more price correction, because you're also not ruling out more selling from FPIs.
Yeah, so, here's the thing. We have a situation where the market for the past, I would say 12 to 15 months has not been driven by fundamentals. It's been driven by fund flows. So the numbers that are coming in month after month, and I haven't seen October's numbers yet unless you guys have, but the numbers that are coming in month after month still suggest that there is zero impact of the FI selling with respect to the flows that are coming in. And I was looking through Angel One's numbers. They've released their monthly numbers. The numbers are staggering. I mean, every month, irrespective of how the market behaves, they have seen a significant jump in net client additions, their average daily traded volume, and overall their funding book for clients. So there's no slowdown on that front. And I think that's something which is going to determine the future course of this market. It's not going to be earnings slowdown. It's not going to be FII selling. It's still going to be driven by the financialization of the Indian equity markets, which is spreading so rapidly that every week, every month, we're adding new first-time equity investors, which is great for the long term. But the fact is, have they seen a correction before? They haven't. And I don't know if this 8% correction is necessarily going to make them think twice.
Okay, all right, Gautam. Always good hearing your thoughts. Thanks a lot for joining in and giving us your take on markets as well as individual stocks and sectors. Well,